Hello, everyone. Our Chapter 7 lecture focuses on assessing and securing your credit. Now, all of our chapters are important, but I think that some may be a little bit more important than others. So, this is a very important chapter on assessing and securing your credit. We'll look at a background on credit, the role of the various credit bureaus. We'll talk about identity theft, protection against identity theft, how to report identity theft, and a credit assessment security fit within your financial plan. Okay? What is credit? Funds provided by a creditor to a borrower that will be repaid by the borrower in the future with interest. There are different types of credits, what we call non-installment credit. Credit provided for a short period of time, such as a department store credit. So maybe you have credit with Macy's, Nordstrom, etc. That's called a non-installment credit, more short term. With installment credit, credit provided for specific purchases with an interest charge on the amount borrowed, such as a mortgage loan, a car loan, personal loans, or examples of what's known as installment credit. Revolving open-end credit, credit provided up to a specified maximum amount based on income and credit history. So often when companies buy items from other companies, they have a revolving open-end credit where Company A may be allowed to buy products up to $5,000. So they'll buy those products and they may have a 30-day period to make the actual payment. But with revolving open-end credit, mostly deal with different companies. Companies are allowed to receive products or services and pay for it at a later date. Now, there are advantages of using credit. It helps build a good credit score, which we'll talk about later. It can reduce or eliminate the need for carrying cash or writing checks to make purchases. So yes, there are some advantages of using credit if you use credit wisely. There are also some disadvantages of using credit, such as excessive spending. Sometimes credit gives us a false sense of security. Now think about it. What have you purchased by using a credit card that you would not have purchased if you had to pay cash for it? Think about it. So a disadvantage of using credit is a large accumulation of debt. It is very easy to accumulate debt, but it is quite challenging to pay off a large amount of debt that you may have accumulated. So make sure that you're using credit wisely, not doing excessive spending or accumulating a large amount of debt. Okay? Now, you do have rights as being a person who used credit. There was the Equal Credit Opportunity Act put in place to try to protect debtors from unethical creditors. Because there are some people who are loaning money at ridiculous interest rates in the hundreds of percent. Yeah, like sometimes like these payday loans, please, please, please stay away from those because sometimes they do what they call predatory lending, where they're loaning people money at interest rates of 300 and 400%, which is just ridiculous. So back in 2010, there was the Financial Reform Act that established the Consumer Financial Protection Bureau. And their job is to regulate online checking accounts, credit cards, and student loans because there's so many things now taking place online that an organization was needed to regulate these online financial institutions. They also to ensure accurate consumer information and prevent deceptive practices. They also regulate the credit rating bureau that we talk about a little bit later. So this agency is put in place to protect the consumers from unfair and predatory lending practices. Okay? Use of credit. Now think about your net cash flows. That's the amount of cash coming in. What are you going to do with your net cash flow? Well, this is saying that it's going to be used for spending. If you have credit, then a portion would be on paying off your credit. And then notice that there's a small portion going into your savings. Now, if you do not have any credit, look at your net cash flows, the spending is still the same, but now a larger percentage can be used on savings. So I'm not saying that you cannot use credit, but you want to make sure that you are using credit in a wise manner. Okay? Credit history is extremely important. Your credit history is extremely important. Your credit history is extremely important. Why am I saying that? Because credit has an impact on your ability to receive financing. Okay? So, your credit history begins with timely payment of utility bills or any type of bill you're paying on a consistent basis and reported to a credit bureau is going to impact your credit history. Pay your bills on time, people. It is extremely important that you pay your bills on time because if you do not, it has a negative adverse impact on your ability to obtain credit. Now, a mistake people often make is that the amount owed, say maybe a small dollar amount, and people say, I'll double up and I'll just pay it next month. No, please do not do that. Make sure that you pay at least the minimum payment amount that's due every month and that you make those payments on time. Now, you can obtain credit insurance in certain instances. This is payments under adverse conditions such as what we call PMI, protective mortgage insurance. So for those who may have a mortgage, homeowners, you may have what they call PMI insurance. This is put in place to protect you. So if you were to lose your job, your hours get cut, things of that nature, then you have this insurance to assist you in making your monthly mortgage payments. Okay? Credit bureaus. These are the organizations and their job is to document and report your credit payment history. These organizations provide what's known as your credit report. And these reports are a history of your credit payment. We have three main credit bureaus being Equifax, Experian, and TransUnion. Again, these are the main three credit bureaus, Equifax, Experian, and TransUnion. Now, you need to check your credit at least twice a year at a minimum. Again, you want to check your credit at least twice a year as a minimum. You are allowed to receive a free credit report on an annual basis. Again, you are allowed to receive a free credit report on an annual basis. We'll talk about that a little bit more. Now, the actual credit report has information. You will have your own unique report number. There's a date, a name on there. It'll have your information such as your name, your spouse information, social security number. It will also show any negative information from public records such as bankruptcies and tax liens. All of this type of information under number 1, 2, and 3 is part of and included on your credit report. So make sure that you examine the information carefully that is listed on your credit report. Okay? Other information on the credit report would be accounts turned over to collection agencies. So if there's any type of judgments against you, things of that nature, any type of liens, that's all going to be listed on your credit report. It shows all account information, both open accounts and closed accounts. So your current credit cards you have in the past, student loans, mortgages, card notes, all that information is included as part of your credit report. Also, any inquiries. It shows a list of companies that have requested your credit report. So if you're applying for credit cards, if you're applying for a car loan, if you're applying for a mortgage, any company that runs your credit in order to extend you credit, those companies, those inquiries are listed and a part of your credit report. Okay? Here we just have a sample of a credit report. Again, it shows a credit bureau, whether it's Equifax, TransUnion, or Experian. It has your personal information, your report number, any type of public record such as a bankruptcy would be on there, any type of collection agencies information would be on there. It'll show all the accounts that you have, when you open the accounts, how much you owe on the account, the highest credit available. It will show if you've been late, see that? 2 times 30 days late, 2 times 60 days late. And again, these late payments have a very negative impact on your credit score. It would also show the different companies, such as Home Depot, in this case, Citibank, Bloomingdale's, that have inquired or ran your credit in order to potentially offer you credit. Okay? Now, your credit score is a numerical rating indicating your credit worthiness. Creditors rely on this score to help determine whether or not to extend you a loan. If this says can, I'm going to say it does affect the interest rate received on loans. Your credit score will show the difference between getting an interest rate of maybe 2% on a loan compared to a rate of 5%. Okay? Now, these are the factors that impact your credit score from a percentage standpoint: your credit payment history, paying on time, credit utilization. So if you have a credit card with a limit of $1,000 and you've spent on a credit card $900, you've used 90% of your credit limit, that has a negative impact on your credit score. Credit history, they'll look at the length of time that you've had credit, and if you paid your bill on time, the number of late payments you've had, that has an impact on your credit score. If you've applied for a new credit, the different types of credit that you may have, whether it's for car loans, for mortgages, if it's for student loans, if it's for credit card stores, it'll look at the different type of credits you have as well, and that also has an impact on your credit score. Okay? So, different scores among bureaus. Typically, the credit scores run from about 350 to 850 being the highest. For some, they use 800 being the highest. They don't always have access to the same information. So you may have a score of 670 by Equifax, but a score of 695 by TransUnion. And that's because they don't always have all the same information. So you need to pull all 3 of your credit reports from all 3 of those different agencies. So typically about 670 or higher considered to be a good score. If you want to get the best interest rates, you want to try to get to a score of at least 720 or higher. Now, if you pull your credit report and notice that there's an error on your credit report, report that to the credit bureaus, again, Equifax, Experian, or TransUnion, and they should investigate information within 30 days and then make any required adjustments to your credit report. Okay? Now, this is all good information, so stay tuned for part 2 of our Chapter 7 lecture on credit.